I do think that Bitcoin could be as large or larger than gold. Bitcoin at $1 million is only a 20 trillion dollar market cap. If you talk to some of the Bitcoin bulls, they'll say there's like no chance that Ethereum can ever be larger than Bitcoin. But then the question becomes, just because it's larger, that doesn't mean that it's solving the same problems that Bitcoin does.
This market analysis features a major highlight from Lyn Alden, where she provided an updated outlook on the market, most especially on Bitcoin, Ethereum, and what is currently driving this sell-off. Let's hear what she has to say about these key topics.
From the beginning, I've been bullish on Bitcoin and I've been bullish on the growth of stablecoins. But that bullishness doesn't really extend to other cryptos. That doesn't mean that there's still not some that are useful. I mean, obviously, there's some things serving as the tech rails for the stablecoins and other types of assets. But that my argument is that the overall market value of those is unlikely to grow very large. As evidence of that, I mean, if you look at the ETF industry, there's over 13 trillion of ETF assets that are, basically a handful of companies issue the majority of them, and those companies are worth less than $200 billion. And the same thing's true for the big stock exchanges in the world. The company, the two companies, New York Stock Exchange and Nasdaq, that are responsible for the vast majority of U.S. market cap, tens of trillions of dollars. To collectively, they're worth less than like half of Ethereum. And so when people look at these crypto assets and they say, well, this is going to serve as the tech rails for billions or trillions of dollars of stable coins and trillions of dollars of tokenized, whether it's real estate or art or equities or whatever you have it, the numbers that they have to reach in order to make these things worth what they already are worth are extraordinarily high. If you look at them on any sort of revenue basis and kind of treat them as though they're a tech equity. And so basically, there's a lot of competition between utility protocols. I think you price them like those tech rails. And the only one that I think is basically worth being a multi-trillion-dollar asset is potentially Bitcoin, because that's the one that's bought for its own sake. It's bought because people want to hold Bitcoin. They want the leading network effect and security for portable capital. So that can potentially warrant it as long as it remains decentralized and secure, and kind of the best at what it does. But outside of that, I think the valuations are quite high.
I mean, if ETH ultimately functions like a toll road with fees constantly, competed down, I mean, how does that justify the valuation on par with the world's largest financial exchanges?
I think it doesn't. I mean, right now it's partially held because it does have that kind of speculative or monetary component to it. But yeah, when we look at what could realistically in size run on Ethereum compared to what already runs on top of ETFs and compared to what already runs on the world's major stock exchanges, even if all of that ran on Ethereum or ones like it, Ethereum's already priced bigger than all of them. I do think that there's still a kind of a speculation premium on the leading crypto assets. Obviously when liquidity is good and Bitcoin's good, those assets are also generally doing fine. So it's not that they're not tradable, but that I don't really see a compelling reason why you'd want to hold them for 5+ years in a similar way that you might do with Bitcoin, similar way that you might do with precious metals, similar to what you might do with high quality equities or real estate.
Yeah, interesting. I mean, ETH bills would say to me, and I would get the tweets, right? I mean, yes, fees compress, but Ethereum secures trillions in on-chain, and utility should kind of command a higher valuation. At least that's what they argue. Where's the flaw in the argument? If the network becomes more efficient, doesn't that reduce Ethereum's value capture even further? I mean, does scaling actually work against the token long term?
I would say it's mainly a size issue. So it is true to say that whatever rail runs things like stable coins or a little bit of DeFi and things like that is worth something. But basically, we're talking right now running hundreds of billions of total locked value compared to these other things that run literally tens of trillions and are trading at less than Ethereum is trading at. Basically, you don't need a $300 billion asset to run $1 trillion in activity or even 10 trillion in activity. And so basically there's still a very big kind of monetary and speculative premium attached to it. And so when you just price these things like you do price existing rails, it's already expensive. So it's basically it's a question of magnitude, in my opinion, rather than the separate question of is it worth anything if something runs on top of it? And of course, the answer to that is yes.
I don't know if you heard about this from BlackRock CEO Larry Fink. He was kind of talking about how sovereign wealth funds are buying the dips. They're not trading it; they're accumulating. What's happening with the price? I mean, why is it falling if sovereigns are accumulating? Is it just a leverage washout? I mean, is market liquidity still too thin for institutional flows? I'm just kind of looking for an outlook going into next year.
Well, sovereign buying, from what we've seen, is fairly low.
Yeah.
It exists, but it's not particularly a massive driver. Um, the major source of selling has been long-term holders, which happens in every bull cycle. So whether you look at 2013, 2017, 2021, or now, and even last year, when Bitcoin does really well and it's very liquid and the price is reaching new highs, you generally have a lot of people that have been holding it for 5, 10 years, where Bitcoin might have been worth 5% of their net worth, and now it's 50% of their net worth or more because it's appreciated so much. You'll generally see some of them selling some of their position. It could be because they want to rebalance and have less concentration risk. It could be because they start a family and they want to upgrade their consumption, their overall kind of this lifestyle, and so they're selling some of their assets. So you kind of get that normal distribution. It's kind of like how when a startup company happens, you have a handful of inside owners, then you have a handful of VCs. It's pretty concentrated ownership. But as the company grows very large and becomes publicly traded, you get selling from those early owners and investors, not necessarily their entire position, but some of their position in order to consume or in order to rebalance. And you see buying from outside entities. So basically, this whole bull market has been driven by people buying through ETFs, people buying through these treasury companies like Strategy. Of course, a handful, some people buying the coins directly and taking them into self custody. But then on the other side of that, there has been, a couple million coins being sold by these longer term holders that kind of take advantage of the liquidity and the strength in the market. So it is still a volatile market, and there's still overall distribution and change of ownership occurring.
Today, the Bitcoin and Ethereum markets are showing a slightly neutral to positive mood, following a period of volatile movement. Bitcoin is consolidating, which means its price is holding steady in a relatively tight range as investors pause to decide the next direction. There's been a recent surge of interest and institutional investment, but for the moment it's taking a breather. Ethereum is demonstrating a bit more strength, managing to stay firm. It is reacting to a recent major technical upgrade that aims to improve its network efficiency. Overall, both of the top cryptocurrencies are holding their ground, with underlying optimism from recent technical progress and broader market momentum.